Hello, I'm Joan Christopher for Heritage State Bank and its correspondent Country Club Bank. The reason you're viewing this video is that your community bank has access to the public finance expertise of our capital markets group. The engagement of our services represents Heritage State Bank's commitment to providing a service to you and your community. Welcome to our informational video entitled Composition of a Bond Issue. John Harris of our Capital Markets Group works with correspondent banks and their community political subdivisions, making local financing of municipal bond issues possible. In this segment, John describes the steps necessary to complete the issuance of municipal bonds.
Thanks, Joan, and hello. I'm John Harris, an investment banker with the Capital Markets Group. Through our correspondent relationships, we offer bond underwriting and financial advisory services to municipalities and their local banks across the Midwest. We take great pride in the leadership role we've earned in public finance. In fact, we're one of only a handful of institutions worldwide to underwrite debt for the three major federal agencies. The purpose of producing this video is to express our belief that when communities and their political subdivisions initiate public improvements, their interests are best served when local interests are involved. And to us, that means having the local bank engaged in the process. Over time, diminished attention to municipal investment has resulted in less interaction between local issuers and local banks. And as we know, one of the greatest dangers facing communities today is that economic activity in the community is usurped by outside interests. For many local government officials, a bond issue is a rare occurrence, seemingly shrouded in mystery. But, like most things in life, it's only mysterious because it's unfamiliar. Once you understand the participants and the steps, the process makes more sense. Let's talk about the participants first. The most important participant in a bond issue is the issuer of the bonds. The issuer is the one with the ultimate need, that is to say, money for capital projects or for refunding. All of the other participants are there to assist in raising the money. The investment banker, also known as the underwriter, markets the bonds to the public and agrees to buy the bonds from the issuer and resell them to the bond purchasers. Many times, the underwriter will also help the issuer structure the bond issue and prepare the disclosure document. In other instances, a financial advisor will help the issuer structure the bond issue, prepare a disclosure document, and assist in underwriter selection. It's also possible for a bank to directly purchase an entire bond issue. In such case, there is no public offering. The issuer's attorney represents the issuer in financing and delivers a legal opinion at closing. The opinion usually covers several important points: that the issuer is validly existing, that the issuer's officers validly hold their offices, that the public meeting at which the bond issue was approved was properly called and held, and that there is no material litigation pending against the issuer. Usually, the issuer also retains a bond counsel firm which specializes in bond issues to work with the local attorney and on legal aspects of the financing. Bond counsel cooperates with the issuer and the underwriter in structuring the transaction with particular emphasis on legal matters related to state law, approvals, and compliance with the federal tax laws. Bond counsel also delivers an opinion at the closing. Once the bond issue is closed, debt service payments are made by the issuer to the bondholders through a paying agent or corporate trustee chosen by the issuer. If the bond issue ever goes into default, the paying agent or trustee usually represents the bondholders in remedial proceedings. Now, it may make economic sense for the issuer to pay a third party to guarantee the bond issue. This is called a credit enhancement. An insurance company may issue an insurance policy guaranteeing payment of debt service on the bonds, or a bank may issue a letter of credit to guarantee the bonds. Now, let's discuss the steps. The first step is for the issuer to select bond counsel and the underwriter or financial advisor. The issuer and the attorney work with these participants to structure the financing. Some basic questions need to be answered. For instance, what is the purpose of the issue? To fund a capital project, to refund prior debt, or a combination of both? Also, what are the legal parameters involved? Does the capital project serve a proper legal purpose? Can the debt be refunded under federal tax rules? Then, how should the bonds be sold? Through negotiation with the underwriter or through a private placement? Additionally, does credit enhancement make economic sense? That is the cost of insurance or a letter of credit less than the resulting debt service savings to the issuer? Once the structure is formulated, the issuer needs to select the paying agent or trustee and the credit enhancer, and all the participants begin to prepare the required documentation. The underwriter or financial advisor and the issuer prepare the disclosure document, which is usually called the preliminary official statement. Bond counsel then drafts the ordinance or resolution and other legal documents. When the preliminary official statement's in proper form, it's distributed to potential purchasers. The marketing period usually lasts a week or so. At the end of the marketing period, the issuer holds a public meeting at which time the bond sale is held. If the issuer has chosen a negotiated offering, the underwriter comes to the public meeting with a firm purchase proposal. The issuer accepts the purchase proposal at the public meeting by adopting the ordinance or resolution prepared by bond counsel. The purchase proposal contains the specific terms of the bond issue, principal amount of the bonds, interest rates, amortization schedule, and prepayment provisions. Once the deal is completed at the bond sale, the participants then proceed toward closing. Usually, the closing takes place about a month after the bond sale. Prior to closing, the bond counsel will distribute for review drafts of various agreements, certificates, and legal opinions. At the closing, the participants execute the various closing documents. The underwriter wires the purchase price for the bonds to the paying agent. The paying agent, at the direction of the issuer, pays the cost of issuance and applies the balance to the construction fund or to refund the prior debt. After the closing, bond counsel distributes a complete set of the closing documents to each participant. Now that we've reviewed the participants and the steps, there are a few miscellaneous points to consider. An important one is that no one knows for sure whether interest rates will go up or down in the future. If an issuer asks, will rates go up or down? Financial advisors and underwriters invariably answer yes, but you can't be sure. The key point is that if the issuer is satisfied generally with the current interest rate environment and needs the money, then it should proceed with the financing. Additionally, if the issuer plans to issue bonds at some point during the year, it may not want to issue tax and revenue anticipation notes during the same year. The issuer should consult with bond counsel about the tax issues involved in this decision. Now, if the bonds are being issued to finance a capital project, the issuer should focus well before the closing on investment strategy for bond proceeds, since the income can have an effect on the size of the bond issue. These points address general procedures of most bond issues, but every municipality has different needs and each bond issue is unique. We understand that and work closely with issuers and the local bank to assure that their specific requirements are considered and addressed. We look forward to working with you.
When you select a partner based on expertise, knowledge of the market, and the desire to work with your public institution, a great benefit accrues to the community and could become an important part of your future. Thanks for watching.